Tired of dealing with annoying flies, fruit flies, and gnats in your home? The Zevo Flying Insect Trap is your ultimate solution. Don't wait. Check out the link in the video description now to get your Zevo Flying Insect Trap on Amazon and enjoy a bug-free home today.
Jeff Bezos has lost $15 billion in a single day, leading to a massive $134 billion stock slump for the world's 500 richest people, including Mark Zuckerberg and Elon Musk. Shares of Amazon.com Inc. went down by 8.8% on Friday as part of a wider sell-off in the market, according to Bloomberg. This dropped Bezos' net worth to $191.5 billion, because of his wealth being wrapped up in his company. Bezos has been repeatedly offloading Amazon shares this year, selling $8.5 billion in stocks in February and announcing plans to sell another $5 billion worth of shares, which would still leave him with 912 million shares, or 8.8% of the stock. This is the third worst wipeout Bezos experienced, after his wealth shrank by $36 billion after his divorce in April 2019 and when Amazon's shares fell by 14% in April 2022. The tech-heavy Nasdaq 100 index fell by 2.4%, which also impacted billionaires like Mark Zuckerberg and Elon Musk included in the list of the world's 500 richest people. The recent plunge of the Amazon shares comes after the company said that it would continue to invest heavily into AI, despite fears by investors all over the industry that the gains fueled by AI this year are overdone. Zuckerberg's Meta Platforms Inc. shares fell by 1.9%, causing him to lose more than $3 billion in value, while Musk's net worth also dropped by $6.6 billion as his Tesla shares plunged by 4.2%. Other Fortune 500 billionaire are Oracle Corp's Larry Ellison, whose wealth fell by $4.4 billion, as well as tech billionaires Sergey Brin and Larry Page, who each lost more than $3 billion. The aftermath of the Nasdaq index falling on Friday was still felt on Monday as stock markets around the globe continued plunging amid fears the U.S. economy may be on track for a recession as Japan suffered its worst sell-off since Black Monday in 1987. Experts at investment bank Goldman Sachs said they now believed there was a staggering 25% chance of a recession in the U.S., up 10% from their previous estimate of 15%, while J.P. Morgan put the chances of a recession at 50%. U.S. stock index futures tumbled on Monday, with those tied to the Nasdaq falling nearly 4%, but traders are now ramping up bets that the Federal Reserve will announce an emergency interest rate cut in response to the global stock market crash and to avoid a huge recession. The sell-off followed the release of a dismal unemployment report last week. Employers added just 114,000 jobs last month, according to Labor Department data released Friday, far below the Dow Jones estimate of 185,000. The figure was the weakest since December last year and the second weakest since the start of the COVID pandemic in March 2020. It comes after the U.S. Federal Reserve on Wednesday decided not to slash interest rates from the 5.25% to 5.5% range, which they have been frozen since July last year. Investors have shared concerns that the Federal Reserve may have left it too late to support the fragile U.S. economy, warning that a U.S. recession would cause chaos within other economies around the globe. The Federal Reserve cuts as well as several high-profile earnings disappointments have contributed to plunging the Nasdaq index into correction territory, according to Bloomberg. This wiped out more than $2 trillion in value over the last 3 weeks.